Welcome back. Let's bring in our panel. Jay Woods is Freedom Capital Markets Chief Market Strategist. Shauna Smith is Senior Investment Strategist at Global X ETFs. And still with me, still with us, Guggen Securities, Eric Mandel. Great to have you all here. I just want to pick up on the conversation we were having right before the commercial break. And I want to get both of your thoughts on what we've seen from these tech prints overnight. So, Shauna, let's start with you.
I think they're impressive. I think it's hard to argue with the numbers, especially when it comes to NVIDIA. Data center revenue growth is 75%. I think it's enough to calm some of the fears that we certainly have seen emerge within the AI trade. I think when you compare that to what we heard from Salesforce, that also reinforces, and especially the reaction that we saw to Salesforce, some of that anxiety specifically around the software names. And so I think it puts to rest some of the immediate issues. I think longer term, once you see that anxiety and the fact that the anxiety has stuck around and continues to creep in, there certainly is overpricing going on right now within the software sector. Are we going to see a total collapse? No. And I thought a lot of Benioff's commentary was very interesting and important to note. Software has been through many, many tough times before. I think what we are going to see play out over the next several years is going to be clear winners and losers within the space.
Yeah, I mean, it's interesting, Jay, because Benioff, basically said the market's irrational, but Jensen Huang has also weighed in on this and said, perhaps this is all overdone and market's missing the point on software.
Yeah, I think you hit the right word, Shauna, is anxiety. We've had anxiety in this market, and what we got now is a little bit of guidance that it's not as bad as people made it out. I think the tell yesterday was Workday. Workday had a pretty bad quarter, to be honest with you, but that price action, that gap lower, the fact that it closed higher, says maybe we finally puked this out with the software stocks and we finally found a floor. So watch today price action. You know me as a technician. Salesforce, the revenue, the guide wasn't what we wanted to see, but watch how it opens and then it trades into the day. It's already starting to pick up. We look like we're finding a floor. Let's get our feet underneath us. As far as NVIDIA goes, let's see how it closes. We've had great quarters in the past from NVIDIA. They are still hitting it on all cylinders, but there's no momentum here. So stabilization of these stocks would be the first step, because they're not lifting this market the way they used to.
Yeah. Eric, I want to bring you back into this conversation as well. Something that I think has been kind of missed so far in the conversation, I'll give a little hat tip to our friend of the panel, friend of the show, Dan Ives, for this. $6 billion year to date from physical AI and robotics at NVIDIA. How big is that opportunity?
Oh, the opportunity is huge. And you're right. Dan is very much in tune as to the way NVIDIA is skating to where the puck is going, sticking with our hockey analogy. Just the sheer amount of CapEx that's flowing through the system right now, by the way, the majority of which is flowing through NVIDIA, tells you how the market is trying to substantiate proper valuation. And I think your two guests here, Shauna and Jay, hit the nail on the head. There is real good news, and the stability associated with the good news around these software names is absolutely critical. And kind of the last point I'd make on this is, there is going to be a strong need for all of the agentic AI and platform providers to leverage relationships with these software companies in order to be successful, and vice versa. This model training cannot be underestimated, and that's going to take a lot of time, a lot of energy, and there's going to be a lot of dependency on traditional software to do that.
Yeah, I mean, Eric, just given the fact that you're on the front lines of deal making and investment banking and capital raise, when we talk about so many of these different types of companies, the U.S. versus China schism, if you will, that seems to be emerging. I mean, the latest now around DeepSeek and the fact that they've been taking the unusual step of holding back their models from previews to some of the American companies and chip makers here. Is that playing out within the space as well?
It most certainly is. I'll be an optimist on this question. I think those two economies have been coupled for a very long time. It will probably continue to be coupled. But I think the one thing that we're seeing in deal making is there is a massive focus on making sure that the companies that are in the sights for M&A can address this question without any dependency on China. And I stress that because that wasn't always the case. Even 5-10 years ago, it would come up, but it would not be central. So when we're speaking with boards right now, people will go through the depth of diligence around where code is, around where people are, where technology needs to be created. And if it touches China, the likelihood of interest goes down materially. So I think you're hitting on a very important point for deal making.
Yeah, the U.S.-China backdrop is very much why you're seeing this dynamic, this negotiation, if you will, play out between the Pentagon and Anthropic right now with a deadline to come to an agreement tomorrow. How's it playing out in the public markets too, Shauna? I mean, I just we just talked about it. Korean Kospi, record highs right now. I mean, it's been ripping and roaring. The AI tech trade is not just a U.S. phenomenon.
It's certainly not a U.S. phenomenon. We're certainly starting to see leaders outside, domestic players, obviously start to catch a little bit of a break when it comes to some of those skyrocketing growth numbers. I think going forward, investors here are able to brush off concerns. I think largely speaking, obviously it spooks the market here and there when we talk about some of the restrictions playing out in China. It doesn't seem to be a today problem. And I think as we look ahead, how big of an issue will it be? I think if you're trying to make maybe a positive spin on this, it's actually going to reinforce some of the spending that needs to happen domestically. So when we talk about infrastructure, the fact that that is so important, how many companies needs to continue to spend on chips, on data centers, that reinforces that narrative of the story, which we know is so critical to the AI trade.
Yeah, and that's what we're seeing, and it's the infrastructure plays that are working right now. The utility sector breaking out. The rotation continues, and now what we're seeing is, all right, the tech didn't take us down. This is great, but what's working? We still have to watch the energy sector. We do have conflicts on the horizon.
Are you watching Iran? How much do those talks matter right now?
Oh, they matter dramatically because the price of oil in an election year, you don't want to see that spike. But that energy sector has had a tremendous run. I don't think it's over. What we've seen in the big ones, Exxon, Chevron, Valero. If you look at the XLE, that's where you want to be right now. That's where the puck is going. So to me, Iran is a big story we're monitoring closely, and I think energy is a safe place to be right now.
Yeah. Final word?
Yeah, I will say
Shauna?
just quickly going on to that, we just had the prices up on the screen here. You have crude under pressure today, and I think that just speaks to the volatility, right? You have prices not far from the 7-month highs, yet we are seeing a bit of a give back here this morning. And I think as we do see some of those supply disruption fears creep back into the market, this is a trade that you're going to want to watch very closely and will likely continue to see that volatility.
All right, we're going to leave the conversation there.